Well, Sam, this morning we have a big announcement coming from the Fed, the central bank in the US, and they were essentially a bit hawkish. The market was expecting a rate cut, which was delivered, 25 basis points. But the important bit was the forward guidance for next year. Prior to the announcement, the bank had said that it wanted to cut 4 times next year. Now it's saying that they're only going to cut, or likely are only going to cut twice. And they've also lifted the outlook for the inflation. And that's important because it raises the prospect that maybe the Fed can go or cannot cut next year. So we're seeing a big reaction in the US dollar, which is weighted significantly on the Aussie dollar. It's not good news if you want to buy foreign currencies. And for the Aussie, it's interesting, as you know, that it was weaker pretty much across the board. And that's a reflection of the Aussie dollar sensitivity to risk aversion. We've seen equity markets react quite significantly, whilst at the same time, the Aussie dollar is also a very liquid currency. So to express that concern, the Aussie dollar tends to be a currency of choice and hence why it's underperformed across the board.
The big news today revolves around a significant decision made by the US Federal Reserve. Markets had been expecting a rate cut, and they did deliver with a 25 basis point reduction. However, the key takeaway came from the forward guidance provided for next year. Initially, the Federal Reserve had indicated plans to cut rates 4 times in 2024. But after today's announcement, it revised that expectation, suggesting that they would likely only cut rates twice. Furthermore, they raised their inflation outlook, signaling a shift in their economic stance. This update has major implications. With the US Federal Reserve altering its outlook, there's now a prospect that the US may not lower rates as aggressively as initially expected. As a result, we saw a sharp reaction in global markets, particularly the Australian dollar. The Aussie dollar has weakened significantly, reflecting its sensitivity to risk aversion, which has been exacerbated by this shift in global economic expectations. The Australian dollar, known for being a liquid currency, tends to be the preferred choice when investors are concerned about market risk. This has led to its underperformance across the board, and it's not a great time for Aussies looking to travel overseas, with the currency now in a weaker position. The Federal Reserve's decision has also had a direct impact on US equity markets. When the central bank raises its expectations for interest rates, it affects the risk-free rate that is used to price risk-sensitive sectors like real estate and consumer discretionary stocks. With interest rate expectations higher than anticipated, these sectors were the hardest hit, causing a significant decline in equity markets. This, in turn, has led to a negative spillover effect on the Australian share market as well. Looking ahead, the Reserve Bank of Australia, RBA, will be meeting in early 2024 to decide on monetary policy. The most critical factor influencing the RBA's decision will be inflation. Currently, inflation remains high enough that the RBA is not ready to cut rates. However, many analysts believe that if inflation shows signs of declining in the first quarter of next year, the RBA could begin cutting rates as early as May 2024. The key piece of data to watch will be the inflation report expected at the end of January. As for the Aussie dollar's outlook, there's significant uncertainty in the near term. The currency was expected to strengthen to above 70 US cents, but recent developments suggest that it may go in the opposite direction. The upcoming US presidential inauguration in January could add further uncertainty to global markets, especially if President Trump's administration takes a hard stance on tariffs. This could affect not only the US economy but also China's response, which is particularly important for Australia given its trade relationship with China. Thank you for tuning into Aussie Pulse. Stay with us for more updates on these global economic trends and how they continue to shape the Australian financial landscape. If you found this video insightful, don't forget to like, comment, and subscribe to Aussie Pulse for more in-depth analysis of Australian politics and current affairs. Thanks for watching, and we'll see you next time.